Well, welcome to the Tech Today podcast. It's your host, John Maeda. Today on our Substack channel, we published an article about the Fed's reverse repo facility, because that's been drawn down quite a bit since year-end 2022 when it peaked at a balance of 2.6 trillion. So the way to think about the Fed's reverse repo facility is that the excess capital that had been created by the Fed during the COVID period, many firms, of course, got flush with that capital, both banks and non-bank institutions. And what those companies would do, both the banks and the non-banks, is that they would park their excess capital overnight at the Fed, and it's in the Fed's reverse repo facility. And so if you look at the chart of that reverse repo facility, which we have in our note, it grew steadily at the beginning of 2021, peaked in December of 2022, and now it's been drawn down as the Fed has removed liquidity from the system through QT. So our article today was essentially saying that the reverse repo facility may be telling us when the Fed is going to stop QT. Because if the reverse repo facility continues to be drawn down at the current trajectory, it looks like that balance will hit zero around March, April, thereabouts. And so is the Fed going to stop QT at zero? Will they stop prior to zero? Will they continue beyond the reverse repo facility balance hitting zero? If you ask me, I view this Fed as very dovish. I think they've just kind of have fought inflation at the margin. They really have not been aggressive with inflation. The current Fed funds rate is barely above CPI. And so I think this Fed will probably put the brakes on prior to zero. And so maybe we're looking at early March, the Fed just sort of halts QT altogether. They haven't done anything on the QT side, on the Treasury side of QT for 2 weeks in a row now. So something to look out for. That reverse repo balance is publicly available. The Fed publishes it every day, the New York Fed. That's all for now. See you next time.